funding opportunities in the market, the bootstrapping, public funding, crowding, crowd investment, crowdfunding, the roles we will go for to repeat a bit of a business angel. And then in the agenda about what our major content is we have to cover during the lessons, there are two words or two words. The one is incubators and the second is accelerators. Who knows what those both mean? Ray, you?
Sorry.
What is it?
I have sent it to you.
Okay, thank you. What is incubator? What is an accelerator? If you knew, you wouldn't need to be in this lesson, right? Okay. Okay, incubator. It is a bit different from the normal organizations or people who are actually investing in business ideas in startups. And it's just that you hear these names, etc., that you know what we are talking about. Incubators are often organizations which helps you to create or to define your business ideas, and mostly starting from the earliest phase and ending with the company's first serious round of financing, or helps you to get into a first round of financing with an investor. That means often these incubators are organizations which finance themselves by sponsors, etc. And mostly they give some money, you know, they give probably 15,000 euro or 20,000 euro or 10,000 or 5,000 euro just to motivate certain startups. And often they have events where startups present their idea, or probably also already a project, and then they name number 2, number 3, number whatever, and then they get a little bit of money. But more important is that these incubators give advisory in legal issues, product ideas. They help you to define the business development, business models, business plans, etc. So often it's an association, or for example, incubators often are part of a university which offers, and I think that Fresenius also support startups with contacts, etc. So often it's these services are done by universities. You will find it quite often. And I just found some examples of incubators in China. I don't know whether you have heard about one or two of these names.
I heard of them, but it's just harder to describe what it is.
So, for example, in Germany, there is one of these incubators, accelerators. It's called Enaxus. And this is not only, this organization is not only working in Germany, they also work in different other countries. And Enaxus is a non-profit organization. And what they do is they look at startup ideas or already startups which have initiated a first approach to the market, and then do kind of events where startups present their idea and their products, etc., within the 20-minute session. And then there are a sort of your, etc., experts or non-experts. And then they give prizes like number one gets 10,000 euro or 5,000 euro. And then you probably have sponsors, they give some money. So it's not a lot of money, but you get a little bit of an infrastructure delivered. And there are lots of those incubators, accelerators. And in this case, in Enaxus, I think they only work with groups, with startups, which are founded actually within a university environment. Yeah? And some of these startups, they went from the university initiative startup into the real world. So they found investors to actually move this business out of the university environment. Yeah. So that means more or less the same are the accelerators. Yeah. And they go more or less after the startup environment. So it's also something not always looking for profit, helping this kind of organization. The Shenzhen Valley Venture, it's like the Silicon Valley in Shenzhen. Is it where they do the protection stuff for Corona? Is it one of the center of these companies doing the masks and all of this? Okay, good. Any questions? Good. Just that you have heard about these guys, and of course there are organizations behind it. Good. Let's go into business angels again. We have heard about these guys. I just want to give you some more or less detailed information about business angels. You know that they are also coming into a startup at an early stage. You know, when you have got the first money from seed or FFF, friends, family, and fools, then often a business angel is coming into the picture. Most of this stuff, of course, is coming from the US, and in the US, you have the SEC, which is one of the most important rulers of different rules for the security, financial, and exchange business. And probably you have heard about SEC. It's often named. A lot of people don't know what it is, but they often in news is yes, the SEC decided, etc. So this is Securities and Exchange Commission, SEC. And SEC is an example for a lot of control organizations worldwide which do the same job as SEC. And the SEC, like the British version of it, the FSA, are the most known of these control mechanisms. And they say, regarding a business angel, normally they are not under control of this SEC. Yeah? But if they buy equity from your company and they sell it to, like, let's say, venture capital, because this is one of the motivation that the business angels going into your business at an early stage. And of course, they want to make profit, and they want to make profit. Either they go with you to the stock exchange, but mostly they try to make money when they go and sell part of the business to the next step, the venture capital organization. And in that case, it is then subject to SEC. That means that in this case, the SEC has a closer look what does the business angel do. And you can, as a business angel, you can yourself let registered. Then you're kind of an official business angel. Of course, the venture capital is mostly registered because most of the venture capital capitalists are organizations, companies. The business angels, they prefer, when you look at most of the statistics, they prefer, like everywhere in this world today, they prefer software and tech business. So Ray and Xiao, your environment with virtual reality, etc., is of course one of the major areas where you can attract business angels, etc. Because these businesses have some very important, I would say, advantages against other businesses. And what are the most important advantages the software, tech, social media business have against other businesses? What are the most relevant advantages?
for example, a better price or a better service?
Not really.
I think for the product itself, it is the quality and the way you sell it to the others is for example the 4P, where to sell and how much you sell, and price and I forget it. Maybe the lower price and the pace the people need your products, and the last is the promotion. You should choose the better promotion way to sell your products. So I think maybe we can through the 4P theory.
So what is the real advantage selling software, tech products, social media-based products compared with retail or industrial? What is the big advantage of Amazon related to a retail shop?
More convenient and more cheaper.
So the point is, if you deal with software, or in general, most of the tech businesses, or Xiao and Ray with your venture, with your virtual reality stuff, it is very easy to distribute. You can distribute it by internet. You can send a CD. You can. You have an infrastructure like a platform, a retail or a shop platform in the internet, and it's so easy to sell. You don't need any shops. You don't need any big equipment. It is enormous profitable because a lot of issues are not necessary. A lot of instruments are not necessary. The infrastructure is very simple. You can use the social medias to actually enhance your business, and people, if they made experience with your product, positive experience, they tell others and say, this is a great business, they do a great product, so they recommend you. So that is the best you can, of course, get in the social media if these guys recommend you. So the major advantages is how to sell the product, and that is very easy. You just send out a code, you just have an app in the App Store, and people load it down 10,000 times, but you did it once, and mostly you don't have a complex infrastructure. Now, that is why most of these investors go for software and tech, etc. business, because it is scalable. And investors look for scalable business. That means business which is easy to double, to triple in revenue in a very short time. They don't like business where it is hard to develop. For example, a restaurant chain is is difficult to develop. It's difficult to grow in a short period of time. So scalability is the key for investors. Is that business I'm investing in scalable in a short time period? Yeah. So that is the major reason why they go into this market. It's like, Ray, if you go into your virtual reality, it is a combination between retail, not retail, but it is more or less internet business. I think you sell the software via download, and then you sell probably, if you like, hardware also via internet orders, and send it like Amazon, or they order it via internet, via Amazon, depending on the product. So that is probably scalable, very easy. Yeah. Question. Everything okay?
Okay, but I think in my business, I have to send the software and the hardware in the same time, because I have so many VR company. Some of them just only sell the software or provide the platform, so that they have to their customer have to use the other brand VR glasses. So I think it will limit your service, because you don't know different VR glasses it is suited for your platform, and some is just sell the VR glasses, but they do not do much R&D, research and development in their platform. So many customers feel bad to use their products and service.
Okay, that means you're actually not download the software on your system. You actually play or use it as a software as a service, yeah, on a central platform. Okay, yeah, of course, that is even more easy than to have it downloaded. Sometimes it makes sense to offer both, especially if you have problems in the infrastructure. For certain countries or areas in the country where you don't have enough speed in your network, it can make sense to offer it as a download. Because the contact to software as a service is not as stable as it should be. Yeah, that's right. And retail, industrial, and then the energy business is also, of course, energy is also a special place. Yeah. This is modern, it is en vogue, it has a lot of money going into this energy environment, especially solar and wind energy is very common also in Germany. I think meanwhile we cover about 25 till 30% of our energy by windcraft and solar energy. So it's a quite high part of our energy mix. And if you look to the solar energy environment, it is very easy. You install on a bit of metal, you install the panels. You don't need to take care about them. You just control, and it's very easy to install. As I said, you have a bit of iron construction, and you put it in 100,000. Very easy to maintain. Perfect. Yeah, perfect. 35% of business angels fund what we said before, what we know, their money into a very early stage, in the seed money stage of startups. They are one of the first giving you money, or the second provide you with money. And what we also have, or that means that they go into higher risk. As earlier you go into a startup, as higher the risk is. And what is a bit astonishing is they go with nearly 30% into an expansion financing. So, for example, if you have your first restaurant or your first 2 restaurants, and probably they was in the very first steps invested, they often invest to expand the business. The average deal size in the US was about $340,000. So it's not always the big amount of money. And the value of the business they went in was about 2.7 million. Of course, the deal size to invest in is different from the value of the business. Who can tell me the difference? What is the difference between the deal size, the investment into a company, and the value of a company, the business value? When you have or create a business at a certain stage, let's say you have the idea, you have done your first product, you probably have your first restaurant, then you do your business plan and you do a projection into the future, let's say the first 2 years. And then you say, or you have an investor, and your investor is asking you, what is the value of your company? And then you say, as you see my business plan with all the explanation, target group, etc., I think that after 2 years, the value of my company is 2.7 million. Yeah. Because of course the company is new, so it doesn't really make sense to tell him what the value of the company is today. But if your business plan is okay, you say that is 2.7 million. And then he says, okay, that sounds good for me. I believe this one. So I give you $340,000 for 30% of your business, which is 2.7 million. Future business. Let's say after a year or 2 years. So he is investing in your future. Yeah? So that one is the investment itself, that is the deal, and the other is the value of the business, which you plan. And you have to plan and to argue, to find the arguments at the end, the business plan, to make him doing this investment in a deal. Because what you want is money. You want to have money from him to expand your business. Yeah. And then you decide with him, is it loan? Or as said, is it an equity where he gets 30% of your business? Yeah. And that is the case for everybody who is at the end of everybody who is investing. They always want either to give you a loan and get an interest rate, etc., or they give you money and ask you for a part of your company, an equity part. The other is 1 of 5 entrepreneurs get funded. So you are 5 people, Yang, Jen, Ray, Aisin, and Xiao. Only 1 of you get money. So in the average, 1 of 5. It's not bad. 1 of 5. If you go for a lottery and you are 1 of 5 to win, perfect.
If I got so many investors, that's enough for all of us.
Yeah. If you say in agreement before, you say, okay, the one who is selected gives part of it to the others. Of course, you can do. Business angels. What is typically, or what does the business angel give, and what does a business angel expect? Because he is somebody who is investing in an early stage of a business, mostly.
So looking for the business who have a strong development potential development in the future.
Of course. But in general, they offer, for some entrepreneurs, it's positive. For others, it is a problem because they don't want to have too much control. Business angels mostly want to be heavily involved in the business. They want to have control, more control than other investors, the venture capitalists, etc. They want to have more control about the business development, about the plans, etc. That is mostly typical for business angels. They tend more to businesses which are easy to understand. That makes everything easier. If you know in a very short pitch what your business is. Because he says in his mind, he says, okay, if I understand in a very short time what this business is, what for, what target groups, etc., the market also will understand this very easy. So and then we have the important 5-minute pitch or 2-minute pitches where you are able to explain to a investor in 5 minutes what is your business, what is and make him investing in your company. That is very important, that you are able to tell in a few words or a few slides what your business is and why this business will be successful. And there is another word you probably have heard wording, there is the elevator pitch. You meet somebody in the elevator and you have 2 minutes and you need to be able to tell him within 2 minutes what the reason is why you talk to him and what is the issue, what you try to bring him clear and offense and explain to him. Because sometimes you will find people, investors, very busy people, they give you only one chance and tell what is your product for, why do you want the money, and then you need to present them in a very short period of time why. And that you should be prepared for these things. Yeah, you should be prepared to explain your business in short words and on the point. Business angels want to understand your business very easy and very fast, but, and that is very positive, they are motivated to add value to your business. They want to support you in every kind. To bring you in his network, to organize, make marketing, organize sales for you. And that is considered the 4-hour rule. That is where we told, or where I talked about 200 kilometers or 400 kilometer rule. Stay in control, get control, become control of the business. That is, it is not too far away in the first stages of your investment. In later stages, when you have a venture capitalist, they are bigger organizations, they are mostly companies, they have more resources, control, and have to have enough money and sources to expand your company, etc. Business angel understand the business, strong involvement, adding value, support you in every case, law, management, marketing, sales, but also from the geographical side, mostly they want to have the business closer than following investors like venture capitalists. And often these guys are not very super rich. Sometimes they have an income of 1 million or 2 million per year or something like this. And they have some money left and they like to go this kind of risk and go into an investment in a small idea, small company. And what I said, these early investors mostly followed by venture capitalists. So that is the next step. Any questions? Everything very clear? Everything fine? Yeah?
Yeah, that's fine.
You know that we have, sorry for that, but we have this Corona app in Germany.
Yes.
You know this, I think.
Mm-hmm.
Do
I know that.
the others know a Corona app?
Oh, we got the similar apps in China, and I'm afraid Chen Su also knows that apps in Corona.
Okay,
In
because
German.
I have a message here.
Uh-huh.
You had contact with a low risk. That means you had contact with a guy who was later on Corona positive tested. Your infection risk is very low. You don't need to be considered, and there is no reason to go to a doctor or to get whatever. So that is what you get if you are contacted by anybody, or you go walking to the city and then you get a Bluetooth connection if there is somebody meets you and has registered, I had Corona, whatever, and then you get this. You don't get this person identified. Your data are protected, but you get the message that there were somebody. Okay, good.
And we got another one. Like this is simply shows the number, totally case 19,000.
Yeah.
And how many people has been cured? How many people is already dead here? And here the number is the cases we got now.
And what is? But does it tell your personal contact?
Did you see? Sorry. a small number here, which is 66. That's the new case yesterday.
No, this here is the personal experience.
I mean,
This means that I had contact. I was in town yesterday
yeah.
with the guy somewhere when I walked to the town, who was, after I met him, positive tested with corona.
Yes.
This is only your personal view. So if this here is red, that means, oops, you should directly to your doctor or etc. Because then mostly you have to go to quarantine or something like this.
Yes.
This is not this is not a normal information about the status. This is just for you personally.
And what I told you is the number 16.6 isn't, as I said, is a new case yesterday. It's not for the province, but for the whole country.
Okay. So this here you can download, and then it is your personal information who you contacted, whether this was dangerous or not dangerous. But of course, it's not registered because of data securities who it was. It is not given you the information where, and it not given the information at what time.
But that's the difference, because if we also have the things like that, when you go to the supermarket or even take the bus, you should show you your QR code, and then you can get on the bus. And once they find corona cases, and you take you check that app, and it's go red.
Yeah, exactly. Then you have met somebody who is who has.
So that's the difference is if your app go red, the only thing you should do is just stay home and waiting the doctor comes. They will come for you.
But the point is, the guys using this, they have to register here that they are.
Yeah, that's good.
Corona. If they don't put it into the system, of course. Okay. I'm very sorry. I have to make an important call. Yeah. I'm very sorry. I just take the video down and the microphone. I will back in a minute. Okay.
Okay.
Hello. Sorry. Hello? Yeah.
Yeah.
Sorry, I had to make this call. Bit urgent. Okay. Everything fine for this business angels?
Mm-hmm.
Yeah, because I wanted to give you a different view on a business angel, as we have already discussed or talked about in the general definition. So this is a bit concrete. Let's go to the venture guys. Yes, these guys are the key organizations, mostly companies. Small venture capital companies have 5, 6, 7 people. Bigger companies have 40, 50, 60, 70 people. Some of these venture capital companies are sister companies of banks or sister companies of insurance companies. So they are separate business. They get the money from investors, private investors. They get the money from institutional investors like banks or insurance companies, and then work as a venture capital company and invest into new companies, new businesses. So they get their money out of the market, private and institutional. So what it said, they are, and that is describing the sense of venture capital is private equity. That means they are not the typical investor to give you a loan or debt finance. They always ask you for equity for parts of your company. Yeah? And mostly the venture capital firms are the ones who bring you to the exit, the last exit of your company. That means they bring you to the stock exchange and make big money if everything goes fine. Sometimes at the same time, the business angels are still in the company beside the venture capital. But mostly the venture capital, they want to be alone. They only want to have the entrepreneur, like you guys, and themselves. They want to have any other guy. So often or mostly the business angel hands over the equity if the business angel has equity-based contract, not debt, not a loan, equity-based contract. He sells the equity, of course, at a very nice high price to the venture capital guys. And mostly the venture capital people, they want to have more than 50% of your company. Yeah, that they have the control about your company. If they accept other investors, let's say the entrepreneur, the company, the idea, the business forecast, everything is perfect, is very, very positive, then of course they go into, even if they don't get 50 or more %. But they need And I think that is a German law. They need to have at least 25 or 30% that they can influence the business, and they have the right to take part on the decision-making process. So they have to have a certain percentage if they don't take 50 or 51. And as it written here, they tend to invest at later in the life cycle, and larger amounts, of course, as a business angel. And that means they take a bigger share of equity. And of course, depending on the business, at least 1 million. And we saw the business angels are far less. That means the venture capital companies, because these are real companies, established companies, they are controlled by the SEC. They are not controlled like a bank, because the venture capitalist is, as we have seen before, it's a non-financial organization. So they are not controlled by the authorities as banks or insurance companies are. But they are, you say, banking or non-financial organization, or sometimes you say these are near banks. Yeah, but you also can get a loan from them. You can get a debt, not only money based on equity participation. Average size over 7 million. So here you see the expansion financial account is 35, and that is what is nearly as much as with the business angels, but of course is at later stage and with higher volumes. And here we see the same as with the business angel. The software, and let's say software, business, internet-based business, etc., was by far the top sector they invested in. Then media, entertainment, and of course biotech and health business is becoming more and more important, because this business also is scalable and as we see today, and we will in future, it is a never-ending story. We all become not more healthy, we become less healthy. The environmental issues, virus, bacteria, whatever, it will be a difficult future for us. And because of our lifestyle, we will become more and more sensitive against all this stuff around. So the health market, the health business is one of the absolute future markets. Yeah. So not the restaurants, not the restaurant, but of course we need food. At these times today, I think you know exactly, in Germany and other countries, they have real problems.
especially for the restaurant, they just basically live on the the go out menus.
Yeah, they have real problems now. Okay, any questions? So that means now I think we nearly covered everything. Everything about, let me check. Come on. So I think, let me just check here. I think we now have seen and talked and collected information also in the books I mentioned to you. We have seen all stages and had a look at all stages of investors. So here we had this very early stage where most of the entrepreneur go into these triple F family, friends, and fools. And in parallel or beside, you have this crowdfunding, crowd investing, where you look for money on mostly platforms you can use to ask for money via internet, etc. Or somebody is going to invest, tell you, okay, I know your idea, you're a good guy, I invest money. And you don't need to search for it, they come and invest. Yeah. And then here, at this stage, you have the business angels. And these guys take the risk to start to make you ready to expand your business. And your growth is mostly financed by venture capitalists. They are investing in the real expansion of your business. So if this guy, the business angel, did his job to make you ready to market, then the venture capital comes and with higher volumes and money and expands your business, makes it international, whatever it takes. These guys are then responsible. And if this company is perfect, then the venture capital guys, they bring you to the exchange. So then they bring you to the stock market. So they bring you to the stock market. Yeah. Come on. Come on. So they bring you to the stock market. They go for expansion, and then if everything goes fine, they make the big money and bring you to the exchange and sell the stocks. Yeah. That is when the bells are ringing. Any question? Ray, are you with us? No. Okay. Next week, I don't know whether you remember, next week we have a session where the European Central Bank, ECB, is giving us a WebEx session, which tells about the institution of the European Central Bank with a focus on the banking sector and how they control or how they look to this sector and influence the economy via having a special look to the banking. The European Central Bank is organizing the money and economical infrastructure regarding the solidity of the euro currency. And you have to know, in the European community, not every country has the euro currency. So you can be a member of the European community, of this overall market, without having the euro. For example, Denmark is part of the European community, but Denmark doesn't have the euro currency. They have the Danish krones still. And it's up to every country to be part of the euro, but they can be, of course, part of the European markets. So the ECB first is taking care about the currency, the euro, but of course it has impact on all economical parts within the European marketplace. The European marketplace is representing now about 350 million people and is the biggest economical organization worldwide. And today, I think we have 28 countries which are forming this European system, the European marketplace, which is special because you can move from one country to the other. without regulation. So if you want to live in Portugal, you go to Portugal. If you live in Austria, you go to Austria and live in Austria. If you want to buy a house in Spain, you buy a house in Spain. If you want to work in Portugal, you can work in Portugal. You apply at a company, and if they take you, you can work in Portugal. If we want to sell a product, a German Mercedes-Benz, to Poland, we can sell it to Poland without any special tax, import tax, export tax. So it's an open marketplace. Yeah, it's an open marketplace. And the ECB is controlling for this marketplace mostly the currency issues. So if you compare it in the US, they call this central bank the Fed, which is mostly known, which is the US Treasury Reserve. In China, it's called the Central Bank of China or the People's Bank of China. And then we have the Bank of England. And in Germany, there's still a central bank, which is the Deutsche Bundesbank. There are still local central banks, but they don't have the status like the ECB, which is the bank for all of this. The Deutsche Bank is different from this. It has only small activities, but it is the people leading the Deutsche Bank are part of the ECB council. Yeah. So, and they will tell us about the ECB and their focus on the banking supervision business. And that will be next week on the 3rd of December in a WebEx session from 10 o'clock until 11. So when we meet quarter to 10 CET, we have 15 minutes and then we go into the session, which ends at 11 o'clock. And then we can go for your presentations. If we don't, if you are not possible to do both two presentations, we start with the restaurant, the case one. And if we don't make it, we will do the next case in the next lesson. Yeah.
Yeah.
So that is the building of the ECB, and the ECB is located in Frankfurt. So it's not far away from Eisen and myself.
I have been to there.
30 kilometers about, or 35, something like this.
Mm-hmm.
Yeah. And I just, here you see the National Central Bank together make the Euro system, and the Central Bank of the Euro system is the Central Bank ECB. Questions? Everything fine?
Yeah.
Okay. Ray wrote us before she disappeared that Tencent is one of the incubators in China. Does somebody knows Tencent?
Everyone knows because WeChat is a product of Tencent.
What is the product of Tencent?
WeChat.
Sorry, I didn't understand you. I said.
WeChat.
I don't know. Is it something like WhatsApp?
Yes, far more better than WhatsApp.
Is it in Chinese product?
Yes,
and
it's also actually I would say both WeChat and Alipay is something like super app.
Okay, yeah, I mean there are a lot of apps which are better than WhatsApp. The problem is if you got it, you are not in the majority of it.
Mm-hmm.
I know some people, they use other products which are more secure and etc. But yeah, you know, Microsoft does not have the best product, but yeah, everybody got it. So, okay. Yeah, that's it. That's it. So I will register you for the ECB session, and you will get an invitation letter from the ECB organization a few days before the 3rd of December. And that is then there is a link to go into the WebEx session. But we see us before, so from this mail we go into the ECB link, and then we find this guy or this lady who does the session. Okay?
Yeah, that's great.
Good. Then we are done. Thank you very much for your attention, and see you next week. If you have questions to your homework, whatever it is, send me a mail or ask for a short session via Zoom. Yeah, no problem. So, yeah, everything fine. Thank you very much. Have a nice time. Stay healthy. And good evening to China.
Yeah.
Bye-bye. Bye.
Enjoy the rest of the day. Next